Hello, everybody. Welcome to Stock Market live stream number 3. As I continue to learn these new technologies, just thought I'd check in, uh, heading into the Memorial Day weekend and touch base with you guys and let you know how I see things. It's been a pretty interesting week. We've had even more upside for the stock market as it continues to go up, and I think that that's the meat of the conversation today. And that is, where do you think things go from here? And in my opinion, there's basically, two sides of the argument. There is that the world is getting better and it's working towards a solution, not only for the health crisis, but for the pending economic crisis as well. So that's one side, right? That's sort of the bull case. And then the next side of the coin is, if you're a bear, then you believe that potentially the health crisis gets worse. Hey, Lion 95, how you doing? You believe that the economy gets worse, Corona gets worse, and everything goes downhill from there. So I think like at the root of buying stocks in this market, at least for myself, is trying to figure out psychologically, like, what do I think is going to happen? And then just being sort of a semi-value investor, and I typically hold out for the best prices that I can find, that plays a big part of whether or not I buy. So lately, over the past 2 weeks, I haven't been buying anything because my mind has been shifted to, I think things are going to get worse. I think prices for stocks are going to come down. And I'm in for the long term, so I don't mind that they come down. I'm not retiring. My 401k, sort of sits off to the side anyway. But I hate to buy stuff at the peak, right? Nobody does. So that's what we're going to talk about. But I also see, excuse me, let me get a drink real quick. Jeffrey came in. My name's Jeff, but my full name's Jeffrey, so good name. He had a question about Macy's. And I'm going to try to learn all these little gadgets that I have. So 1 second here. And let's take a look at Macy's. Macy's is interesting because in the retail space, certainly in the department store space, they are best, they've done a great job of managing the retail downfall as best as they can. You see this year-to-date chart. So obviously, Jeffrey, I'm guessing you're looking at this like, hey, is this another cruise line? Is this a buy low, etc.? But you were at $16 on February 19th. Macy's $5.18 right now. Suspended their dividends. My thoughts on this, let's take a look at the stats here. I really like companies that have growth. And I don't think Macy's has any growth left, potentially for the rest of its life. You are getting Macy's at a deal right now. And from a volume standpoint, this is a pretty big company, and 1.6 billion market cap. I could see that Macy's goes up from here, right? Just because they're kind of sort of at rock bottom. I don't know what happens in the long term, though. So this isn't a stock for me because I typically buy for the long term and I want to see some semblance of growth. But if you're doing something with a swing trade or you're just trying to get in and out, I think, there's probably some dollars in there. When the next time it goes up, my guess will be when they reenact the dividend. That's my 2 cents. So I hope that helps. All right. And Mr. Canucks, Lion 95, asking about Cisco. We'll type that one in real quick. Oops. So I do like Cisco. I have a piece of Cisco, I think either in FDN or IYC. I can't remember. I don't hold Cisco like as a standalone stock, but I'll tell you what's awesome about Cisco, because I know this one pretty well. Here's your year to date, right? So they're still down, even though the NASDAQ is like crushing it so far this year. Like Cisco is still off a couple bucks. You got a dividend, P ratio under 20. Let's take a look at the stats. So I'm always right here, guys, when I'm on the stats tab, trailing P, forward P, checking it over time. This will help with Ron, who was asking a little bit about how I look at stocks. I love historical comparisons, and you see that Cisco's trailing PE only back to January 2019, for whatever reason, went up high that period. They might have had an acquisition, but even this time last year, before trailing PE was 20, now you're down to 18. Forward PE goes down even further, and price to sales and price to book are both down pretty well. So this looks like a really good time to do a Cisco buy. If you're interested and you believe in the company, right? That's the key to everything. If I don't know a lot about the company, or if I don't understand it, then I usually don't buy, even if no matter who tells me it's a good deal. But what I'll say about Cisco, I think the win for Cisco is they're in, of course, networking components and wireless components. I think work from home is good news for them. And I think that even beyond work from home, this whole world of home is just getting bigger, right? So the appliances that are connected to the internet, the special door locks and floodlights and all that stuff. I don't know if those are directly tied to Cisco technically, but Cisco ultimately has the tools to power your home network. And so while they may not make the Nest thermostat, they're basically providing the infrastructure that those things connect to. So long story short, I do like Cisco. I hold it through an ETF, and I'm happy that I do. Hopefully that helps. All right. Ron, yes, I will talk about entry price in a second. And then Jeffrey, there is some tip thing, power stickers or something. I don't think my channel's big enough. So that's nice that you were thinking about me. I don't think my channel's big enough to have those features. So hopefully one day, but for now I don't. I'm going to throw Ron's question on here for deciding entry price. And I'll take something that I personally was working on today, and I'm big on. Speaking of Macy's, retail stocks. Oops. Didn't want that. You see where I'm going, though. TJ Maxx. Bought some more TJ Maxx today. Wasn't super duper happy about the price, but I really do think that they are about to tear it up. If I can enter the right stock symbol here. But this is coming around Ron's question about getting into a stock and then going from there. So today, by the way, I bought probably first thing in the morning. I may have even gotten into the high of the day, of course. You know, anytime you buy a stock, you just assume that 10% is going to drop off immediately. But let's look over 5 years. So I think the things that I'm looking at, Ron, is first of all, the most important thing that I like to do is watch it and do nothing for 3 to 6 months, unless there's just this like incredible opportunity that you can't overlook. Then anything that I've ever bought has been on my watch list for at least 3 to 6 months. And the reason I say that is because trying to get an idea of how much ebb and flow there is to a stock. That helps me understand like what is low, what is high. Let's go through a couple like pullbacks with this stock just on the watch list and see like how far we think it can go. You can probably recreate the same thing by going to this 1 year chart and just kind of like, let's see what it did. Okay. For TJX, it's going up before the crash. You can see that, it pops up and then it pops down. A little play in there. What do we start at? 50? And it looks like the play is like plus or minus 10%, right? So on any given day, if we woke up on January 13th at $62, we know that historically we could wait a little bit longer and probably get it for 10% less, just the way that this one is ebbing and flowing. And that didn't quite come true on January 27th, but you got in at 60. So that would have been a buy target for me if I was watching in this little area. It depends on how bad you want to get in. The PE stuff is all going to be big for me. I'm going to be in the statistics like I just was. I'm going to look at trailing PE. And you see with TJX, like it doesn't move a ton, man. It just doesn't move a ton. It's always in that 20 to 23 PE, except for right now. Forward PE is a little high, but that's just because nobody knows what's going to go on with retail. So that's my 2 cents on that. The price to sales is down a little bit from the past couple quarters, so that's a good sign. Price to book is down a little bit from the other quarters. So in my opinion, looking at this, yes, it's my stock, so it's not really fair. But I believe that this is a fair time to buy TJX. And even though I'm desperately awaiting the next stock market pullback, this wasn't the day that I necessarily wanted to buy TJX, but I finally got tired of seeing it go up. And I was like, you know what, I'm going to add this position because if this bull market continues, it's going to go back to 60 and I'm going to regret it. So that's why I jumped in. Hopefully that helps a little bit, Ron. Oh, the other thing I wanted to show you, Ron, is that I also use tip ranks. You probably see them on my videos all the time. And what's cool about tip ranks, for me anyway, is I never just trust myself, right? I always like to get as many other opinions as possible. So I'll go in here and just not to take up too much time, but I'll just kind of see what the analysts are doing. So I always sort by this like best performing analyst column. This is a paid service, by the way. So I don't know how much they give away for free, but I'm a subscriber. So I always go to best performing analysts, 8 buys, no holds, no sells, 21% upside, projections ranging from 75 to 60. I feel pretty good that if I buy TJX today and I'm planning to hold it for the long term, that unless there's some catastrophe, I'm getting a pretty fair price. Like I still have upside built in. So, that gives you some idea. Hopefully that helps, Ron. All right, let me take that. And so Lion's saying, yeah, we know it's tough to time the market, especially with the COVID. It all depends on how quick it goes away. But do you think we may see another dip like we do in March? And that was my sort of topic for today. 1 second here. I want to go back to, I will eventually get really good at this, guys, but I appreciate you guys being the guinea pigs while I try to learn this. So this Lion 95 is at the crux of my mental struggles right now. And that is all this money is coming into the market. Most of it is probably, thank you, Shanice, is probably plumping this whole thing up. I just don't know how it's not. And so like the NASDAQ, this is just incredible over the past, let's just do 1 month. Okay. So, like, you see, this is April 22nd, right? And we are now on May 22nd. And this is how much we've been up in the past, like 10 days. Let's see, 18, past 4 days. We've had just even more run up. It's hard for anybody to look at this from a fundamentals perspective and say to themselves, this makes a ton of sense in the world that we live in today. Um, and I'm going to take this off the screen and talk for a second. My problem with everything is maybe I'm just disappointed, and maybe you guys are too. I wish we had a hell of a lot longer to pick in on the bottom of the market. Like that bottom was maybe 7 to 10 days long. And I think most of us who watch every day, we all thought it was going to last longer. I was scrambling to get capital, like just to try to divert some money from savings, and I did what I could, but I also like to keep money in savings because I have a family, 3 kids, so you can't screw around with that. And then before you know it, stuff was off to the races, and my sort of like practical mind says, I'm going to wait till the next down day. And frankly, there just wasn't that many of them. So, my topic for today that I started on, and it answers Lion's question a little bit, you have to look in the mirror and ask your personal self one question. Do you think that COVID, the economy, unemployment, foreclosures, you name it, do you think that those things are all at their worst, or do you think it's going to get worse? I lean towards, my sentiment is that we're being inflated somehow artificially, and that I do think things are going to get worse. I don't know that it'll be worse than March, but I do think things are going to go back down. And so I'm just buying barely enough to keep my sanity, just to participate, but I'm saving my big buys for another dip. I need at least 10%. I don't know when it's going to happen, and it may not even be till January, which is unfortunate. I think we are wired right now to buy stocks from, not like from the media. I'm not trying to do tinfoil hat stuff here, but I think, like, savings isn't pain, right? Um, you get nothing out of savings. The housing market is stagnant to down, or certainly will be soon. The only thing that's going up is the stock market, right? So we're kind of getting these inputs in our brain that's like, man, I want to make money with the money I have. The only thing that's going up is stocks. And so I better just get into stocks. I can't I just can't rationalize that that's always going to be the case over the summer and into fall. I feel like more opportunities are going to come up. Those opportunities might be in real estate. I'm not sure, but even if you're a pure stock market buyer and you're not interested in rental homes or whatever, um, you can still get into REITs, right? REITs sort of suck right now, or they're, borderline because no one knows which way they're going to go. But you'll eventually have an opportunity to buy REITs on sale. So I don't know. I'm leaning towards glass half empty. I'm trying to be patient. And if anyone who asks me a similar question to Lions, I'm saying look in the mirror and ask yourself, are you out in the street? Are you in the mall looking around with all these people wearing masks and you can't eat in the freaking food court and all this crap that's going on? And do you feel like super awesome about the way things are going for business? I don't. I feel okay, but I don't feel like growth, right? I feel like stagnation across the board. And so I'm holding out. That's my 2 cents. But I don't want to tell you guys to not buy anything, because what if you miss out on some of the stuff I've already missed out on by not buying, right? So that's the catch. Hopefully that helps. All right, let me just see. And Lion, this is me right here. Lion and I are on the same page. You can never have enough cash. And I did a video last week or the week before, or actually it was this week, wasn't it? That I said, like, tricks to time the market or some kind of thing. And I wrote those down. In that video, if you don't have time to watch it, it was like 5 ways to time the market, right? I'm not telling you can time the market, but I think you can make intelligent timing decisions for the money that you do have. So buy the dips, buy below your cost basis, right? So if TJX, my cost basis on that one, it's a bad example really because I'm in the 40s, but I was worried that it was going up. But let's just pretend it was $45. If I was in that one, I'd be looking to get in below 45. Red days is another time to time the market. At least you get some percentage off. And unfortunately, there hasn't been any red days, so that's been out. Price targets. So I showed the tip ranks dashboard there for a second. You kind of take like a pulse of what the analysts are saying, and you're like, okay, the analysts are saying, roughly $75 over the next 1 year. Then that's your mark, right? So that's your price target. If you believe it, you say, cool, I believe this stock will hit 75. I want to make sure that I'm buying below 75. This is kind of the game I'm playing with TJX. And I'm just going to close my eyes and jump in, and I'm going to hold. And I know that I'm not selling until it's at 75 or above. That's another way to kind of time the market without timing it. And then the last tip in the video was cash. Straight cash. Nobody will ever yell at you for having cash. And I'm sort of hoping to do, what all the great investors tell you, which is try to just hoard cash and wait for the so-called blood on the streets or whatever they say. That's what I'm waiting for. So I don't know. We'll see if it happens. I'm a little worried that it may not happen until 2021 now. Just the way the Fed is coming in and helping everybody. The one thing you guys can search and do your own research on is the concept of liquidity in this particular predicament that we're in with the health crisis. There's some folks that have written pieces. I wish I had a link for you. That liquidity right now is high. So basically meaning, it kind of pertains to me at a much smaller level, is that I have cash, I have availability for cash. Even folks that are not doing well in their business or unemployment, they are getting some cash from the feds, right? So going out and buying a cheeseburger, as a poor example, is still easy right now, right? Going out and getting a loan for the house, yeah, credit scores are going to be a bigger part of it, but you can go get money. You can go buy a car today, relatively easy, assuming you have a solid credit history. Do you want to go to a car dealership with COVID? That's kind of up to you. But the availability of money is here, and that is a lot different than the financial crisis of 2008 or whatever it was, because people were locked into their loans and they couldn't get more money. So everything that they tried to do to like pay off credit cards to get out of these shitty mortgages, they were locked with no money and they are leveraged to the tilt. Now the argument is from some people, and I kind of believe in it, is that we have plenty of money. There's plenty of cash on the sidelines for the investors that can move the market. They're just not spending it, or they're putting it all into stocks. And the Fed is also, semi into stocks with their bond purchases, and that's what's floating everything. So I'm not smart enough to tell you if that's true or false. I'm just trying to tell you that that's the stuff I read, and it kind of makes sense. All right, let me scroll through the questions real quick. I don't think we have any new ones. Yep. Okay, so the other thing I was going to talk about today off to the side was what I sold today. This is what I did. This is how I justified my TJX purchase, by the way. I didn't actually go down in cash, but I sold K-Web, which is Chinese internet stocks. I think I've shown this one before. It just has all the big ones like Alibaba and Baidu. What do we got? Tencent, Alibaba, JD, Baidu, all the ones you've heard of, right? I don't know what in the hell is going on with China and the United States, but they are not friends. And there's a lot of delisting threats going on with the NASDAQ and stuff for Chinese stocks right now. And I sort of decided that I don't want to be part of that. So I sold, unfortunately for me, I didn't make that much money. I got it when Trump was having problems with China. So I'm over here. This is 5-year chart. Probably somewhere in this like January, February range. I think my cost basis was 45. I sold first thing this morning, and I think I sold at 50-ish. So, and it was only 20 shares, by the way. It wasn't a big deal. So maybe I made $100, maybe. But I immediately took that money and I just flipped it around and bought TJX because I'm like, I don't know what's going on with China. I'm not going to stick around to find out. I'm excited to buy TJX, so I'm selling this, which I rarely sell, but I rediverted it into TJX. So I just wanted to throw that on the board. I'm not a huge. That's an odd day for me, but just to kind of share that. Other stuff that we have that I wanted to throw out there was just kind of talking about like, hey, what's left? What deals, are we looking at across the board? And I think that there's a decent chunk, but you have to dig just a little bit deeper. The one that keeps popping up on my filters right now is Expedia. And I'm not saying, please be careful, please do your own research. I do not own Expedia as a standalone stock, so let's just get that out there right now. I'm not pumping and dumping here. But again, you're going to have to look in the mirror and ask yourself, does Expedia have a bull case or a bear case? If you think, get TJ Maxx out of here, let's go 1 year. If you think that travel will work itself back, then I think Expedia is in a good spot. I think, I got a lot of shit for ripping on the cruise line stocks 2 or 3 months ago. And the reason that I did that was not necessarily because I think cruise lines are going bankrupt forever. It's just, man, do I want to be in cruise lines? Or do I want to be in a company like Expedia who sells every vacation under the sun, right? It doesn't matter if you're flying or your hotel or your cruise or your vacation rental. They're going to get a piece of that action. I would bet much more strongly on the travel industry as a whole bouncing back than I would on a single entity of the travel world bouncing back. So let me add, I think Carnival is like CCL. Yep. So let's take a look at these things. And I just want to kind of share my opinion here. This is a 1-year chart. Expedia took a nosedive on 11/6. Was that maybe even a stock split? That's a pretty big jump down, and it's a straight line. Whatever. Let's pick it up from November. These guys were neck and neck, right? We get to the crash, and Carnival tanks way under Expedia. And what's happening right now? Expedia's bounced back. So if you went dollar for dollar on November or right before the crash, then you lost big on the two, much more with CCL. Yeah, you lost big on Expedia too, but you see what's happening is Expedia is slowly bouncing back because they're not as exposed to a single industry. So from a stock perspective, and let's see what Booking Holdings is doing, because that's the exact same thing. It's just very expensive in the sense that it's like a $1,500 stock. Booking Holdings is even better, and they're the big dogs. They have more in the game than anyone else. And you see what happened with Booking is they went down, yes, but they're already way back up. Or excuse me, they are recovering at even a higher pace than Expedia. So that's I just wanted to share with you guys that there's still deals out there. They're still in travel. I don't know if I would go cruise line. I think you could go Expedia or something like it and not have all the risk and probably not have to start from rock bottom, and you're still going to make the same gains. So hopefully that helps. Another one on the topic of things that keep popping up on my radar as possibly still woefully undervalued is Boeing. This is not. I'm not big on industrial. It's so contract heavy. Like if you don't fulfill, companies like Expedia and Carnival and Booking can have revenue come in much more quickly than Boeing. Boeing is all calculated contract stuff, and it's very unlikely to change over the short term, but it can change and certainly in the long term. Boeing's one that if you believe airlines come back, which I think, like, how do they not come back, right? We can't drive to, I live in Ohio. We can't drive to California every time we want to go to California. So Boeing needs airlines to come back. And then once almost directly as that happens, they have the potential, let's call it over 2 to 3 years, to get back to this 340 mark. They will eventually have a dividend again. So that's one that keep popping up on my charts is like, hey, this stock is technically a good stock. They are basically hold the entire airlines hostage over, Airbus on parts, service, the whole nine. So keep Boeing in mind. I don't have enough research on Boeing to tell you, but I think for a long-term play, this is a pretty good price, at least from far away. Cool. All right, I'm going to go back to my screen. And yeah, so Jeffrey is commenting about and Jayu from Indonesia. Baba is dual listed. I believe you can redeem in HK. We're talking about delistings, right? And you guys can see that stuff in the chat. But yeah, so Chinese internet stocks, everything that you guys are discussing, and I think it started with Lion. What happens if they get delisted? Man, I don't know. I think you do lose everything, but that's exactly why I got the hell out of the game. I'm not sure if KWeb was holding the American stock offerings for those Chinese stocks, or if they were holding the ones on the is it Hong Kong or Taiwan exchange. I'm not sure. Long story short, I don't have time to figure it out. For the same reason as Luckin Coffee that comes up in here. Dude, it is so weird with China right now. And you can't, unfortunately, I've said this before, let's just take Luckin Coffee, for example. The regulations in China, the federal regulations for companies and how they make money is crazy different than America. So reporting fundamentals, stuff like that, it's just wildly different. And I don't trust myself to know enough about it to tell about who's lying and who's not. So as soon as I see a little smoke in there, I'm just out, and I'm going to come back to America with at least I know in America, when Google reports their earnings, that there is federal guidelines for how they report them and how they measure them. Everybody pushes the rules on all these things, but I just feel better. And so that's why I got out and took an opportunity with TJ Maxx. All right. I covered the stuff that I was going to cover on this live stream. Is there any last minute questions? I'll look at any stock you want while I'm on here for another 5 minutes or so. If anyone wants to throw it in, I'm just going to pause for a second, let you guys think about it. Let's just take a look at what the market is doing as we enter the last couple hours. S&P almost flat, Dow 30 basically flat, and NASDAQ basically flat. So weird day, not a lot of activity. It's going to be interesting, in my opinion, to see what happens when we come back from Memorial Day. Jeffrey put in Yext. I know Yext because my career is in digital marketing, and Yext is a locations-based service provider. So let's just take Walgreens, just to pick one. Walgreens has God knows how many locations, and Yext gives them an opportunity to work all those digital address listings and Google Maps and Bing Maps and God knows what other maps to keep their listings accurate, and also to offer like little promotions. And if you think about COVID right now, how many stores were closed for the lobby? How many of them had hour changes? Yext does a great job of giving marketers the power to control those listings all through one dashboard. I was a performance marketing manager at Sunglass Hut for a few years, and we used Yext because we had hundreds of retail stores. So I can attest to the product. The interesting thing about Yext is it's never really broken out. Looks like you had a high of 22. You're at 14 now. Right before the dip, it peaked at 16. This is their problem. If they have a problem, it's this: EPS minus $1. They're still just struggling to be 100% profitable. But with a company like Yext, and you see we haven't had a PE or forward PE in a long time. Let's take a look at their debt real quick. Revenues at 300 million. Cash of 256 million, total debt of 123 million. So not poorly managed from a debt side. They have more cash than they have debt, so that's an awesome thing. I think the win with Yext is they just get bought. Like, why doesn't Google just buy them? So that's what I would be hoping for if I purchased Yext. I think that I can attest to their software is awesome, and their team, at least the team that worked with me at Sunglass Hut, was awesome team. So I will call it good company. Upside, I don't know if the upside's more than $18 in the short term. However, they could get bought. Probably no one's buying any companies right now, but if anyone could afford to, it would certainly be Google. And then you win at, $20, $21 a share. So that's my take on Yext. It just so happens I was super familiar with that one. That was, just to put it out there, that's Yext. Okay. David Jensen, I'm from EU. Welcome. And I 100% prefer America. That's even better. What about Visa? Love Visa. Check out 2 videos on my channel. I will put up Visa right now. But I did Visa versus MasterCard, and I did like Visa stock analysis. I think both of those occurred in 2020. So you get like a really long winded recap of my thoughts on Visa if you go there. Short version, love it. Absolutely love it. And I want so very badly to buy it. That is on my target list. I was hoping if I had $1 million, I would have been all over Visa at 135. I think probably I've missed out on the opportunity with Visa to get it low. You see how we're trending. Let's go to 1 month. I mean, it's just like, this is a nice dip at 175. I would buy it today at 175, no questions asked. I think 190s isn't even bad. It's not even a bad thing, but I just want it for less. That's it. And so I'm probably being greedy. Let's see what tip ranks analysts have, because Visa is going to be widely covered. Visa, by the way, versus MasterCard, the summary version is people think MasterCard has a lot more growth opportunity because they're not as big. My sentiment is that Visa has probably 3 times as better technology built for digital payments, and they are expanding their world at a better pace than MasterCard. Unfortunately for them, they're just a little bit bigger. So here's tip ranks, 15 buys, 3 holds, but you see what's going on here. Median price target over the next 12 months because of Corona, they're saying 5% upside. So looking, David, I guess my take is, man, it sucks to buy at 190, not because it's a bad stock. If you're going to hold it for 10 years, like I probably will, I shouldn't even sweat the 190. But man, wouldn't it be awesome to get at 175 or 180 and just establish that position? So that's my take. I hope it helps. Can't go wrong with it. I want bigger gains. Two Lion is dominating the show with Berkshire. I never know how to say it. So Berkshire, I'm the only person, I think, and I'm going to be careful saying this, but I might be the only person in the world who thinks Warren Buffett is starting to lose his grip a little bit on the way that the world is going. And I'm not talking about the fact that it took him 20 years to buy an Apple iPhone. I'm talking about I'm talking about the concept of buying these traditional companies that buy low fire sales and furniture stores, See's Candies, ice cream shops, and all this stuff, airlines. Warren Buffett and Berkshire typically don't invest in the same kind of companies I do. And they are smarter than me, and they are billions and billions and billions of dollars ahead of me. So I personally am not interested in Berkshire because it doesn't align with the sort of growth companies that I like to dabble in. However, they have a track record of success that spans, let's look at 5 years, man. This one, the B shares, back in 15, you were down 130. You made it all the way to 226. Corona came in. And then, of course, he recently sold all his airlines. So that's probably what this dip is. That's not even necessarily a bad thing. I think the hard thing for Berkshire right now, at least as I hear about it on the news, like just sitting around on cash. Usually when you invest in something like this, your expectation is that, let's just take like BlackRock or one of the big firms. The expectation is that you don't want these guys to hold cash with your money. Like, you can do that shit at home. Like, go buy something. And I can't believe that he didn't buy anything. Maybe we will find out next year that he is still the smartest guy on the planet. I'm just a little nervous that the Corona thing, that they didn't make any moves. And then the moves that they did make, they sold. They sold out at the low point to airlines. I kind of sort of get why they did that. But Berkshire did not buy. They sold in a time when most of the guys and gals in this chat were buying. So that's my take, Lion. You know that Warren Buffett is super duper smarter than me. I'm just sharing my opinion. I don't even know how to say Synchrony Financial. I think they do credit cards, but let's look them up. SYF. Banks is another good one. I don't dabble in banks, but finance and banks, they are still down big. So like the JP Morgans, you guys follow those, and the what's the other one? Wells Fargo. Those things are still down big. It looks like on this one, man, this is an interesting dip right here. Corona dip down to 17, 52-week range. The high side is 38. You got a P ratio under 4, which is certainly interesting. Trailing PE, pretty good. I mean, I go across these quarters, and 4 outside of 331, which was basically still Corona, you're still at one of the lowest points on these trailing PEs. Forward PE of 7, right in line with what we have seen. So forward PE is kind of flat, if you will. Price per sales is down, which is good news. Price per book is also down. So I don't know here, DPF. This is interesting if you know a lot about the company. Gotta love that. 36% profit margin. Let's take a look at some of the bad news. So $8 billion in revenue, $13 billion in cash, debt of $17 billion. Debt is really weird in banks, and I almost don't want to comment on it because I'm not the expert. But the banks hold assets, right? So they hold loans, they hold credit lines. The way their debt is calculated is different than like a Walmart debt, which is like hard debt that they use to open stores and stuff. Bank debt is different, and I'm not the expert, so just know that. However, I always like to see these two things right here. How much cash do you have versus how much debt? This is an amazing ratio, and it might be just a made-up metric in my brain, but I like to be able to pay off all my debt on any day that I can wake up, and they basically can do that. So, hey, DPF, I would say if you know a lot about this company, the fundamentals on this look solid. I guess the only risk, let's see if this Argus report. So Argus says raising target price to 19. That was on May 20th. I guess the question is how quickly can SYF recover back to the norm? If you got a year or two and you feel good about what you read and analyze on this company, then I don't know, man, it looks pretty decent. All right. Lion, I am in Ohio, Cincinnati, Ohio. All right, let me grab the last. I'm going to do the last two, and then I got to roll. But Monster Beverages, start there, and then we're going to look at Costco, Walmart, NEE, which I'm not sure what that one is off the top of my head anyway. Monster at least was a good growth company. That's a pretty strong recovery. You've got basically back to where they were on February 20th. P of 33. Let's take a look at our stats and see, is Monster expensive today on fundamentals compared to where it was? And it does sort of look that way. So trailing P of 33.53 today, right? As near back or as far back, however you want to look at it, it is right at that line of trailing PE that has been offered over the past 18 months. So I say it's not on sale. That would be my first thing. And then forward PE, which stays flat, forward PE is notably higher than it was over the past several quarters. Let's see how they're doing. $4.3 billion a year, about $1 billion in cash, almost, oh wow, look at that, almost zero debt, $30 million. So the sales would be the big one. Price to sales, that's I guess a little bit more expensive. Price to book, a little bit more expensive. Long story short, I have not studied Monster up close, but what I see just looking at this stuff with you guys, my take would be my familiarity with the brand in general. I think they have strong brands. I don't think that this is a deal today at 68. I would be more hopeful for this kind of May 4th area, right? $59. That'd be great. But you may not see that again the way this market's going. So that's my take. Hopefully that helps. All right, let me hide this. And let's look up knee, because I don't even know what that is. Oh, energy. Dude, and I'm sorry, you guys, I don't do anything with energy. I can't keep track of it. Um, that is the business model for energy. What kind of energy is this? Sometimes they have a little paragraph down here. NextEra Energy generates electric power to retail. Okay, so it's almost all electric. They generate electricity through wind, solar, nuclear, fossil fuels. So it seems like run-of-the-mill electric company. I would be hesitant to say on this one. I'll go in the stats and I'll tell you, like I did for everything else, trailing PE is flat to high from the past several quarters. Forward PE, just a little bit cheaper. So price to sales, price to book. You know, if I had to buy this without knowing anything about it, I'd want to see 10%, 10% off. So what is this? 231. Last time you got 10% off was a while ago. Yeah. Man, maybe trying to get it at under 220 might be your best bet. You do get a nice dividend with all these energy stocks, so you got that going for you. But I can't help you analyze the business. I just don't know enough about energy. You did ask about Costco versus Walmart. I'm way big on Walmart. Oh wait, you put waste management. I thought it was Costco and Walmart. Costco, I'm not a member. I've never been in a Costco store. I'm not the guy to ask. I think it's incredible what they're doing, that you can charge people to go into a store. And I don't typically buy in bulk. So I'm going to pass on that. But I will say Costco has been a performer for, well over a decade now. So whatever that's worth. On waste management, I like the concept of waste management. This is obviously dumpsters, trash disposal, all that stuff. I'm actually a little surprised that it even fell during the corona. So this could be a good buying opportunity because I don't think trash went away at the high level. Let's take a look at our stats. Trailing PE today of 25, a notch cheaper than we've seen in the past. Forward PE, a little bit more expensive than we've seen in the past. Price to sales, maybe cheaper. Price to book, a little bit cheaper. Revenue of 15 billion, cash to 3 billion, 13.45 debt. If I had to buy or sell this one, I think I would have to spend a lot more time on it. I would have to get a feel for, are companies going out of business that are going to dramatically lower the billings for waste management? Why did it go down during Corona when it should have been roughly flat? Those are kind of questions that I would need answered here at this 96 or whatever price level. And then what is the upside? How are they going to start sparking new business in the midst of what we're going through? That's how I'd look at it. So I don't really have a say of yay or nay, except that it doesn't look like right this absolute second that you're getting a phenomenal deal at 98 compared to where waste management has been. That's without not knowing very little about the company. All right, I'll do one more graphene. I'll do this one just because I've never heard of it. And I got to roll, guys. This is pink sheet stock, unless I'm totally spelling it wrong. So I'm going to pass because it's at least, if this is the one, then it's OTC, penny stock. I wouldn't know anything about that. I don't trade in penny stock, so sorry. That one's kind of a bust. But I guess, bottom line, my point of today as a wrap up to everybody is, if you're going to buy, stick with things there's my strategy anyway. And don't let me tell you what to do. I'm sticking with things that I know how they work. And for example, I'm way out on the pharmaceutical train. I think that dozens of companies will develop a vaccine. I don't think that there's any riches in vaccine right now. That's my 2 cents. And I'm sticking with the companies I know. And I'm still a little bearish. I don't think we're being offered awesome prices here today, and we haven't been for the past 7 to 10 days. So I'm trying to be, I guess, Warren Buffett, right? I'm trying to just hang on to my cash and wait for the good opportunities to come through. So hope you guys enjoyed this. I really appreciate everybody who came in. Obviously, this channel, I'm trying to grow it, trying to do my thing. So when you support this, it makes a big difference. And just in case anyone here is a regular, I'm waiting till roughly 10,000 subscribers or so, and then I'll have some more cool stuff. So I'll do like the full, like my full portfolio and all those things that everybody asks about that I don't share. I'm just waiting to get a little bit bigger audience, and then I'll probably try to set up something like a Slack channel or a email or something that the guys and girls that we talk to more often can sort of have more of a group. But so that stuff's in the plans, but I need to focus on growing first. So hope that makes sense. Hey, have a great Memorial Day weekend. Get outside no matter what the temperature is, and enjoy the fact that we are free and able to get outside. So have a good weekend, everybody. I'll talk to you soon. Bye.